Nigerian external reserve has risen to a 17-month high of 37.05 billion naira in July 2024, in a development likely to boost investors' confidence. The last time Nigerian had reserved slightly above $37 billion was February 2023, exactly 17 months ago, according to Central Bank of Nigeria data. Welcome to Business Point, where we extract the Nigerian economy and the government policies. I am your host, Kikelomo Okere. The latest reserve level was disclosed by Olayemi Cardoso, Governor of Central Bank of Nigeria, who said the amount rose from $34.19 billion in June. This was after the two-day Monetary Policy Committee meeting in Abuja. According to MPC, the increase in the level of external reserve will further build confidence for a more stable exchange rate and thus urge the bank to explore availability avenue to improve inflow, especially through diaspora remittance. It says diaspora remittance have gone up to $2.34 billion in 2024 compared to $1.8 billion last year. Adding that, forex inflow have risen to $38.88 billion from $37.93 billion in May 2024. Cardoso says there has been convergence in exchange rates between the official and parallel markets. According to him, policies of the fiscal authority have helped to moderate food inflation, noting that there has been a positive outcome of the foreign exchange. He noted that capital importation grew to $5.92 billion between January and May 2024, from $1.77 billion the corresponding period of 2023. The CBN raised the monetary policy rate, also known as benchmark interest rate, by 50 basis points to 26.75% with an eye of combating inflation and fostering a favorable climate for foreign investment. The CBN also adjusted its asymmetric corridor from plus 100 minus 300 to plus 500 minus 100 around the MPR, retained the cash ratio reserve of commercial bank at 45.00%, 14% for merchant bank, and held the liquidity ratio constant at 30.00%. The committee was also mindful of the effect of rising prices of household and businesses and expressed its resolve to take necessary measures to bring inflation under control. It re-emphasized its commitment to the bank price stability mandate and remained optimistic that despite the June 2024 uptick in headline inflation, prices are expected to moderate in the near terms. This is aimed on monetary policy gaining further traction in addition to recent measures by the fiscal authority to address food inflation. The electricity distribution companies in Nigeria generated revenue of 291.62 billion naira in the first quarter of 2024 amid blackouts in the part of the country. This was even as the nations lost 673 megawatts of power generation capacity due to gas shortage during the period. In a report by the Nigerian Electricity Regulatory Commission, it was stated that the revenue generated by DISCO was out of the 368.65 billion naira billed to customers in the first 3 months of the year. The total revenue collected by all DISCOs in the first quarter of 2024 was 291.62 billion naira out of 368.65 billion naira billed to customers. This translates a collection efficiency of 79.11%, which represents an increase of plus 0.32 percentage points when compared to 2023 fourth quarter, that is 73.79%. The report also revealed that the average availability generation capacity across all the 27 plants in the country during the quarter was 4,249.10 megawatts, representing a loss of 673.16 megawatts, that is 13.68% decrease compared to 4,992.26 megawatts recorded in the fourth quarter of 2023. It said 17 out of 27 grid-connected plants recorded decreased available generation capacity in the first quarter of 2024 compared to the fourth quarter of 2023. Recall that this was a period when Nigeria experienced a prolonged power crisis as gas companies refused to supply gas to power generating companies due to unpaid debt. In the period under review, the average energy offtake by the DISCO at their trading point was 3,283.87 megawatts hour, a decrease of 429.29 megawatts hour compared to 713.16 megawatts hour recorded quarter of 2023. The Security and Exchange Commission, in collaboration with the African Bank, have called for a heightened embrace of green finance as a strategy to combat climate change and foster a sustainable economy in the country. The Director General of the Security and Exchange Commission, Emomotimi Agama, disclosed this at the capacity building workshop for capital market operators on green finance in Lagos State. Agama stated that climate change posed a risk to humanity, citing the International Monetary Fund report that highlights the warmest period recorded in the recent year. It says embracing green finance will help tackle the current problem, saying Nigeria must adhere to government principles that enhance the effort against climate change. It stressed that both the federal government and the Debt Management Office have led initiatives to fund afforestation and renewable energy projects, setting a precedent for sustainable development. It urged businesses to support this transition by diverting from unsustainable practice and adopting green finance principles. Agama highlighted the importance of involving key stakeholders in discussion that promotes green finance, noting that this is a pivotal moment to align investment practice with environmental, social, and governance principles. Highlighting a promising trend of sustainability themed fund, he noted that the organization is committed to driving positive change through green finance initiative. It urged stakeholders to leverage coordinated policies, advice, capacity building, and regulatory support to build momentum for a green economy. Also speaking at the event, Executive Commissioner of Operation of Security and Exchange Commission, Bola Ajomali, stated that artificial intelligence, machine learning, and big data analytics are essential for risk assessment, monitoring, reporting, and portfolio management. Ajomale highlighted the use of climate bond certification and blockchain technology as example of innovation enhancing green finance, stating that these technologies contribute to market analysis and transparency, supporting sustainable investment practice. He stated that international bodies such as European Security and Market Authority and Financial Conduct have the tools to monitor market and instill confidence in green finance to foster trust in the green financial sector. The Nigerian Customs Service, Muritala Mohammed Area Command, has disclosed that it generated 80.3 billion naira between January and June 2024. This was made known at the press briefing by the Command Controller, Michael Awe at the Muritala Mohammed Airport Area Command Office in Lagos State. The comptroller says the figure represents a 107.5% increase in revenue during the period under review, compared to 41.6 billion naira collected during the same period in 2023. The custom boss says the increase in revenue was made possible through the concerted efforts of the officers to ensure the agents were made to make truthful declaration while adhering to import and export guidelines. It further says the command also recorded 266.66 million naira as an export value within the same time frame under review. While charging its officers to sustain the tempo of work, Awe stated that the command had taken a firm and tactical approach in its operation of enforcing government fiscal policies on actions that had led to the seizure of drugs, arms, and ammunition, among others. While itemizing seized contraband within the past 6 months, he noted that in the area of anti-smuggling, officers have not been resting on their oars in enforcing government fiscal policies and other trade regulation. As a result, the command recorded 5 packages of 250 milligrams of tramadol, 12 pages of 225 milligrams of tramadol, 1 package of 50 rounds of 9 mm live ammunition, 4 packages of dried monkey male genitals, among others. The duty paid value of the seized item is at 6.06 billion naira. The controller reiterated the command's commitment to sustain and improve revenue generation in the second half of 2024. He, however, sought the continuous cooperation of all stakeholders and assured them of command's commitment to promoting ease of doing business and trade facilitation. All right, we'll take a short break now. While we're on that, we'll take a look at some of the business stories in Nigeria. Stay with us. Don't go away. Hello and welcome to Business Report. The Central Bank of Nigeria Monetary Policy Committee has raised the interest rate by 50 basis points from 26.25% to 26.75%. The Governor of Central Bank, Olayemi Cardoso, announced this at the end of the Apex Bank 296th MPC meeting held in Abuja. The MPC also pegged the cash reserve ratio for Deposit Money Bank at 45%, while that of Merchant Bank was put at 14%. The liquidity ratio was pegged at 30%. The Apex Bank also adjusts the asymmetric corridor around the MPR from plus 100 to minus 300 basis points around the MPR to plus 500 and minus basis points around the MPR. Speaking on the reason for the 50 basis point hike, Olayemi Cardoso, chairman of the Monetary Policy Committee, noted recent events in the economy such as inflation and the need to stabilize the foreign exchange market as a rationale for the increase. He further referenced recent policies of the federal government to import specific staple foods such as rice, maize, and wheat to help stem the rising food inflation, but warned that the timeline should be followed in order not to stifle the gains made in local food production. Cardoso praised the convergence between the official exchange rate and that of parallel market as part of effort to reduce arbitrage in that sector. Three major Nigerian banks, GTCO, Access Bank Holding, and Fidelity Bank, are set to allocate a total of 186 billion naira, that is $244 million, from their recent public offering to bolster their IT infrastructure. The move is part of their strategy to comply with the Central Bank of Nigeria new recapitalization requirement. The bank's prospectus reveals plans to strengthen their cybersecurity frameworks and acquire new software licenses, driven by a surge in electronic transactions and increasing instances of online fraud in Nigeria. The Naira posted impressive gains against the haven currency amid the increased inflow from Central Bank of Nigeria, recording its best gains since March. The Apex Bank is also poised to raise headline interest rates one last time to support the Naira and throttle inflation, which is near a three-decade high, before ending its aggressive tightening campaign. Data from FMDQ reveals that Naira gained nearly 100 Naira to a dollar as local currency exchange hands, representing a whopping 640 basis points increase, higher than the 1,596 Naira to a dollar quoted last Friday. In black market, a popular medium for trading forex among the populace, the local currency settled at 1,570 Naira to a dollar, gaining less than 100 basis points compared to 1,580 Naira on Friday. The CBN sold roughly $106.5 million to registered foreign exchange dealers over 2 days, late last week, to support the country's failing currency market. Nigerian Apex Bank claims that the primary drivers of the most recent fluctuation in the foreign exchange market are increased demand from business organizations and the expected seasonal rise in the summer. Kike Lomo Okeri, Global Television News. You're welcome back. If you're just joining us, this is Business Point, where we extract the Nigerian economy and the government policies. Unilever Nigeria has reported a 61% increase in its profits after tax for the first half of 2024, reaching 4.4 billion naira compared to 2.8 billion naira in the same period last year. The growth attributed to a revenue increase, which rose to 41% to 63.9 billion naira from 45.4 billion naira in the first half of 2023. This was disclosed in the company's unaudited interim financial statement for 6 months ended June 30, filed with the Nigerian Exchange Limited. Unilever is principally involved in the manufacture and marketing of food, beauty, and personal care products. The company's gross profit surged by 100%, doubling to 6.2 billion naira from 13.1 billion naira in the prior year. Operating profit also saw an increase, climbing by 133% to 4.1 billion naira from 1.8 billion naira in the first quarter of 2023. The growth is driven by revenue and increased other income from asset sales and non-operational activities. The company's finance income increased by 29% to 4.1 billion naira from 3.2 billion naira, while finance costs dipped by 5 billion naira. The net finance is a result of higher interest income and lower borrowing costs. In the period under review, selling and distribution expenses rose by 50% to 2.7 billion naira from 1.8 billion naira. This increase is due to the cost associated with increased sales volume and expanded distribution channel. Also, marketing and administrative expenses grew by 118% to 105 million naira from 48 million naira. The rise in the expenses include investment in marketing campaign and administrative improvement to support the company's growth. The company recorded an increase in other income, which more than doubled to 3.5 billion naira from 1.7 billion naira. This growth is due to gains from asset sales and other non-operational revenue stream. Unilever achieved a 6% increase in profits before tax, reaching 6.3 billion naira from 3.9 billion naira in the previous year. The company's total assets increased by 10% to 127.9 billion naira from 116.3 billion naira in 2023. The growth is driven by increase in current assets and strategic investment in non-current assets. The Nigerian Senate has passed the Amendment Bill of 2023 Finance Act and increased the windfall levy on banks' foreign exchange revaluation gains from 50% as proposed by the President of the Senate Committee on Finance. Senator Sani Musa read the report of the Committee on Finance before it was finally passed. Furthermore, the Senate also amended the commencement date of the amended Act from 1st of January 2023 to commence of the new foreign exchange policy after Senator Aminu Waziri Tambuwal raised objection to the retroactive nature of the amendment. Members of the Red Chambers also increased the timeline for the application of the windfall levy from the end of 2023 to all profit from foreign exchange transactions from the beginning of the new forex policy to the 2025 financial year, as is stipulated in Clause 2 of the amendment. It is important to note that the Central Bank of Nigeria introduced the new foreign exchange policy through the unification of all segments of the foreign exchange market on June 14, 2023. The Senate also passed the Amendment Bill of 2024 Appropriation Act to add 6.2 trillion naira to the 2024 budget for recurrent expenditure, which include payment of the new 70,000 naira minimum wage and renewed hope infrastructure project across the country. All right, this is where we draw the curtain on Business Point today. Join me again tomorrow for another edition on Global Television. We are on Start Time Channel 276 and 365 on DSTV. To stay connected, kindly follow us on all our social media handles at Global TV Abuja and our website, globaltvabuja.com. Till I come your way again, I am Kike Lomo Okeri. I celebrate you all.